Welcome back to the Trade Site YouTube channel, and let's talk about the 12 price action setups and tricks that you absolutely must know to improve your trading quality. And once again, thank you for all the likes, all the comments. It's great to see the support that my videos are getting. Keep the comments coming, subscribe to my channel, and I will be making more videos going forward. So I prepared 12 very powerful price action setups and tricks that will help you look at charts in a very different way and help you understand price movements in a much more professional approach. And the first one, here are two concepts in one. We have the loss of momentum. So what we are looking for is price and trend analysis first. Here the market was in a very strong uptrend. We have significant bullish moves here and here, and then leading up to the top. But here was the absolute top of the trend, and ever since the market made lower highs. This is a very important finding, and a market that is not able to pull into a new high, especially after a prolonged uptrend period, is already giving you some information that the market is not as strong anymore and that the buyers are not as interested anymore in keeping the price up. So loss of momentum can be observed by looking at the lower highs. At the same time, the market is applying, or the market is building here, a support level. A very important level seems to be in this region. Previous resistance turns into support, resistance again turns into support and support. And then first we have the breakout. The market pulls into this region and then it makes the retest. So the break and retest pattern is very common. Where's the retest ending? It's ending right at the previous support, now turning into resistance once again. And this further confirms that not only is the uptrend here likely to be over, but now after the break of the support level and now with the retest, it is very likely that a new downtrend is actually starting. And you can see here we have an outside bearish candle, a very strong selling candle here, indicating the potential breakout, and that's exactly what happened afterwards. So there are so many things coming together: the loss of momentum, the break of the support area, the retest, and the fact that support is holding as resistance, the outside candle that's leading to the breakout, that it is very obvious that the bearish market has now a much higher likelihood of emerging than the opposite, than having the market go back into the range. So a lot of clues that we can pick up already from our first price study. And another one is the wedge exhaustion. I really are a big fan of wedges and exhaustion patterns. And again, it all starts with trend analysis. We have a very strong uptrending market. And especially when we look at the way the highs form, this tells us a lot about the trend market and the strength. And you can see when we look at the single trend, at the single swing high points, from here to here to here to here, the market is just barely able to make a new high. It is not able to push higher as strongly and as quickly as it did here. So this is showing us that the market is really not as strong anymore. The buyers are not as interested. And now the sellers are able to drive the price down much stronger. Here we have a very strong downtrending phase. And when we look at the previous uptrend, we've never seen such a strong bearish phase. Here again, and then here we have a double top. And there are now so many things coming together which highlight that not only is this uptrend likely to be over, but there's a high chance that this is even turning into a bearish market. And you can see after the breakout of the trend line, we have a local support area here. The market is really collapsing and the new downtrend is starting. So again, there are so many things coming together that will help you improve your trend analysis and your price analysis once you start paying attention to those little subtleties. The triangle continuation, another very powerful formation and a powerful pattern. And what does it tell us? It tells us the market was in a downtrend here, and then the downtrend paused for a little bit. The bulls are not really strong. The bulls are never really able to take control over this market. You can see here was a double top, so the bulls didn't even succeeded in pushing the price higher. And you can see here the market kept making lower highs. Here we have a little bit of a trend line then established. And the trend line is often, or trend lines in general often, describe consolidation and just temporary pauses in the market. And when you can find such a very shallow and very almost straight trend line, it is often a good signal that the trend continuation is very likely to happen. If, for example, you would see a very steep trend line, that would indicate that there are lots of buyers actually in the market. But a very shallow trend line is actually showing you that the sellers are still pushing into the lows and the buyers are not in control here at all. We have a failed trend continuation. So you can see we have here higher highs and higher lows on the left-hand side of the chart. We have a pretty long consolidation here. And then we have the final push of the price action, breaking up the previous highs, but the market didn't succeed. It moves back into this trend line. And then on the next bullish push, it just makes here a very significant lower high. And a lower high, as the Dow theory already said so many years ago, is then a very clear signal that the trend is not likely to continue. And after this failed breakout to the upside, and you can see here the market returning into the trend line, you only have to wait for the confirmed breakout and then the market collapses. So this is a very important trend reversal pattern that you need to learn in your trading. We have trend fading. I'm a very big fan of that because this is the basis of one of the setups that I trade in my own trading. And you can see how the trend analysis really helps us understand what is going on. Here, when we look at the first part of the trend, the market collapsed very quickly. So in a short period of time, the market fell significantly lower. This is a very steep angle. And then the market here, the trend angle here really flattened out. So very different from what has happened here. Very steep trend, very shallow trend. And not only that, but we also have here a double and a triple bottom, further confirming that the market is not even pulling into new lows. So not only are we seeing here the flattening out of the market or the trend, we are also seeing that the market is failing to break into new lows, which is a very important component and a very important piece to the puzzle. And it makes the bullish reversal very likely. Of course, we don't know until the market really breaks above the trend line and breaks above the recent swing high, but those are all clues that will help us find better opportunities even before they exist. Of course, we need to wait for the breakout, but at least you can start following those markets and you know that you will be ready once it breaks higher. Head and shoulders are not only reversal patterns, they can also be great continuations. And here, within this uptrend, the market made a short-term consolidation. The head showed that the market even tried to break below the latest low point, but the downtrend or the attempt to start a new downtrend was immediately rejected. The market moved back into the previous highs. Now from the head to the right shoulder, it makes a significantly higher low, and then the market breaks out into new highs. So we don't know that the head and shoulder will signal a continuation before it actually breaks out. But once it breaks out, we can put everything into context and we can look at a very high probability pattern because we know how to put this all in context and how we can let price tell us a story. So a very great pattern that I use in my trading quite a bit. We have the breakout buildup. I already made some videos about the breakout buildup because it's a very powerful pattern. And I really would recommend anyone that is interested in trading trends or continuations to really study it. It's a very powerful pattern. And the idea behind this is that once you are having or once you're looking at a very important resistance level or even a support level, doesn't matter, but in this case we have a resistance level very well established, you will see that when the market pushes into the resistance level and it's not able to move away from the level at all, this may often foreshadow a successful breakout. Because what does it tell you? It tells you that the market previously was able to sell off quite a bit and it moved lower quite a bit from the level. So there were a lot of sellers here. But now this time, not a lot of sellers in the market, which means that the buyers are slowly gaining the control over the market. And if this is then becoming a successful breakout, if you have the breakout buildup previous to that, there's a very good chance that you will actually have a follow through because the sellers are already withdrawing here and the buyers are taking full control over the market. We have a retest continuation, a break and retest pattern similar to what we did what we had in the beginning. The market was in a downtrend. established a nice support level. Here we have the breakout, and very, very often the market is coming back into those breakout areas. There's also, or this is also one of the reasons why the break-even stop-loss approach is rarely working for traders. Many traders are trying to implement a break-even stop-loss. So once you get into like a breakout trade here, the price moves in your favor, you adjust your stop-loss back to break-even, the price comes into your stop-loss, takes it out, and then moves on to your target. This is happening very, very often. And if you see that, you are pulling your stop-loss too soon to break even. It is better to have your stop-loss protected above a support or resistance area. And you should really start paying attention to retest continuations or just the break and retest pattern in general, because this is something that will happen over and over again. Continuation triangle. We have looked at triangles as breakout patterns for reversals, but they can also be continuation signals. So the downtrend was started here, but the downtrend came to a pause, and the downtrend here established, or during the downtrend, the price established a very, very good support area, very well defined with good swing points, but at the same time, the highs are coming down. So we keep having lower highs and lower highs and lower highs, and I don't recommend to trade within those ranges. Once you understand and once you see that the market is stuck in a range, you don't want to trade in a range. You want to wait for the market to really clear the range. So here you have then the breakout. Once the breakout is triggered off such a pattern, then usually it's a good way to get into, or maybe wait for the retest on the lower time frames. But as long as the market is trading within such a pattern, don't get involved. It's a very, very easy and sure way to just get chopped up. And once you start seeing that the highs are coming down, the highs are pushing into the level, and the highs are indicating the trend direction here, then it can be a high probability pattern once it breaks out. Fake outs, I have talked about those in separate videos, and they are really, really powerful tools and concepts. So the market was in an uptrend, the uptrend ended here, and then the market came into this level a few times here and here. And here it even looked like the market was breaking out. So we had a high close. We had also a very, very large wick here. The next candle had another wick. And then you can see how the market collapsed. So this is a very weak breakout. You can see the market is not able to close at all close to the previous high. And then the next candle has an inside bar also with a rejection. So two failed breakout attempts. And then the next candle collapses lower, and then you can see how the market really plumbs lower. So a failed breakout, a fake out, especially with multiple rejections, can often foreshadow a trend reversal. This is a very, very powerful tool, and I really recommend to all of my students also, and to everyone, start paying attention to how the market reacts to previous highs and lows. The trendline breakout, a very, very powerful tool. I talked about this in my last trendline mastery video. And you can, again, it's really important, you can see how the trend dynamic is changing here really significantly. Very strong trend. In a short period of time, the market rises very steep. And then here, as the market, or as the trend progresses, the angle really drops off. Very shallow level. So you can already see a lot of buyers here, not so many buyers here. The sellers are gaining more and more control. We have a lower high here. You have the breakout and the retest, and then the market starts a new downtrend. So it can already be a good heads up once the market and once the trend angle here really goes down, and once the trend angle changes so much. But only after the breakout is happening, that's when you really look at potentially high probability trading opportunities. And here we have a supply reversal. So whenever you find those significant wicks, and when you ever find those wicks at key trend turning points, so the market was going from very strong uptrend to very strong downtrend within a single candle, you should really mark those levels on your charts, because there's a good chance that something similar may repeat itself going forward. And once the market moves back into such an area, don't blindly trade those areas, but wait for the market to provide you a pattern. Here we have a triple top, we have a very nice support area, and then on the breakout, that's when you really have the trigger. We trade something very similar in our masterclass and also in my price action course and in the supply course. And this is something that is a really simple but powerful price action scenario. And it really pays off to know about those, because there is a lot of supply happening here and there's a lot of supply in this area, that it really pays off to have those on your charts and really pay attention to the times when the market moves back into previous turning points. And those can be at the origin of great trends. Very often you will see that when the market comes back into such a level, new trends will often start. And that's it. 12 price action setups, price action tips. I hope you can use them in your trading. Let me know in the comments if you or which one you like the most, so I can make a more detailed video going forward. And let me also know your questions and other topic suggestions for my next videos. Thank you for watching. Make sure to subscribe, and I will see you in the next video.